Labrum, your host with my favorites, my faves in the house today. We have Alex Klingensmith and Darcy Wadsworth. What's up, guys?
Hello.
Hi, Jason. How are you?
But we're glad to be here. We're back, and here we are on Financial Detox, talking about some topics that we hope are near and dear to your heart, or at least things you've thought about. And we're always open to new topics and new show ideas. So if there's something you want to hear about, please let us know. You can go to financialdetox.com and you can connect with us there. You can give us a call at, do I even know the phone number, Alex?
877-707-8889, 877-707-8889.
Right,
or
give us a call.
Email's even the best, jason@financialdetox.com, probably the fastest response time for any questions or ideas or thoughts.
No doubt, unquestionable. So Alex and Darcy, I mean, look, this is going to get wild. Darcy said she's bringing up our planking, which I think is something we should be really proud of, that we are a
Look at my points. How many points do you have, Darcy?
Yeah.
I do not have that many. Well, first off, I just have to say in a full confession that I didn't even do it the first 3 days because I didn't think it started till Monday, and it was really February 1st. So I lost out of the whole first section of it. So I don't think without that kind of attitude, and I've only seen a drop in plank one time. I don't know if I've missed that. So for those people that are not in our office every day, there is a central system where it says drop and plank, and you have to stop what you're doing and drop and plank.
Yeah.
So
it only
have
happened.
We had
once.
a drop? I haven't seen a drop and plank. Was I not here? What happened? I missed that.
It was only once, and it was like back on the week of February 4th to February 10th. It's a really weird calendar she created here, but it's only happened once, Darcy. Maybe she'll give catch-up points, like for those that, weren't paying attention.
Or not local
missed the first 3 days.
Yeah.
I did see the drop and plank, so I got in on the drop and plank, but I did not do the first 3 days because in my mind things don't start until Monday. So whatever.
Submit all complaints to Jason at Financial Detox.
I don't want any. But this is a good point because our listeners, we need to tell them what we're talking about here. So we're doing a planking challenge. The Financial Detox team and IDA Wealth Management, we're doing a planking challenge to be healthy. And I think we have to drink like 17 gallons of water a day or something, waterboard ourselves.
Oh boy, neither one of you have any. Okay, so one of our values at this company is personal improvement. So the theme for February and the theme of personal improvement coming off of like New Year's goals and whatnot is health and wellness. So 64 ounces of water a day, which is 2 of these guys. And then you plank for 1 minute per day the first week of February. And then 2 minutes a day, the second week, third week, fourth week. Somehow there's 5 weeks on the calendar. I thought February was the shortest month, but somehow
That's because the first, second, and third was Friday, Saturday, and Sunday. That's why I got all jacked up. I missed a whole week.
Okay.
We're gonna have to start talking about money and finance at some point.
Okay.
The
correlation.
Show is called Financial Detox.
Correlate us.
Maybe we could change it and call it it could be just like the health detox or something like that. But
what matters in retirement is health. So the first question of the day is do I have enough money saved in retirement? It doesn't matter if you can't plank and drink water, right? Because you won't live long enough to enjoy your money anyway. So plank and eat, drink water, and then how do you know you have enough money saved?
This is an interesting topic, and I think it's crazy. Again, and we've talked about this a lot, is how bad our education system is with regards to teaching the general population about money and what does it mean. Like large swaths of people don't understand that, all right, you can reasonably pull a 4 or 5% income or rate of return as an income off of a portfolio. So if you have $1 million saved, think $40,000 to $50,000. And that is a pretty general rule that I think is fairly sustainable, especially in today's interest rate environment that does change over time. We were in such a declining interest rate environment for so long that the 5% rule became the 4% rule because money markets and bonds were yielding, 1% and 2%. So it was really difficult to see how you could create a portfolio that would generate 5%. But I think we feel pretty comfortable with that. Of course, there's no guarantees, and past performance does not equal future performance and all that. But I think it's pretty safe to go with a 5% number. What do you guys think?
I have a lot of clients that think life is really expensive right now, and they're having a hard time groceries, gas, all the things are more expensive. Life in general is more expensive. So they're not feeling as comfortable as they did in that 4 or 5% number, or they haven't really thought about it, but they're pulling out an extra couple grand here, an extra couple grand there to cover extra expenses where they wouldn't have had to do that, before. So
that's a good point, Darce. And unfortunately, I saw a number come across my desk today. The average American is spending $12,000 more per year to live than they were in 2021. Thank you to massive spending, radical debts. I mean, we have $33 or $4 trillion in debt now. Alex, do you remember when we were doing a lot of presentations and whatnot, we kept talking about there's $19 trillion of debt. And then we did the how long it would take to pay that off. We did the 1 million, 1 billion, 1 trillion analogy to say how long it would take it off. And it's like 880,000 years when it was $20 trillion of debt, paying off $1 every second for our country to pay off the debt. And now we're at 34 trillion. We, like, literally in our short time frame of doing financial detox, we've gone from 19 trillion of debt to $34 trillion of debt. The numbers. So Darcy, your point is, like, we have so much money floating around that inflation is real, right? We've stimulated, tried to prop up the economy. We've messed with the dollar so much that it's become less valuable. And now that's creating real problems for the average person because they can't meet, I mean, an extra $12,000 a year of expense. You got to earn 15 or 20 to have 12, right? Because of the taxes, that hurts.
For sure.
That's a big deal for some people. And yeah, so in the taking an extra 1,000 here or extra 2,000 here out of your portfolio, if you're doing a 5% standard withdrawal from your portfolio, but then you take an extra couple thousand, all of a sudden your withdrawal 7, now that's getting pretty tricky and maybe unsustainable.
Yep. I definitely agree with that. I have a couple of clients that are trying to retire between now and the middle of this year. And one has decided not to retire until maybe the first part of next year and get an extra 6 or 8 months of work in. And one is retiring, but really struggling with it and sitting down, trying to crunch the numbers to see if it's going to work. And they want to retire shortly on March 29th is his target retirement date. And he's really scared. We've had several conversations about what's going to happen and how much money he can spend and when his Social Security is going to start to help him out a little bit. But so it's scary for people right now, for sure.
The good news is, go ahead, Alex. Yeah.
No, go. You should finish your thought and then I'll.
Oh, the good news is we have the answer, right? With the proper financial planning tools and the proper guidance with a fiduciary advisor, you can figure out what's going on. And there's both sides of the spectrum, right? We work with clients that typically have $1 million investable assets or more. So we're used to dealing with people who have money. They've already got through the Dave Ramsey baby steps. They've saved some money. They've had a liquidity event. They've, they have money. They're executives. We work with clients with $20 million and $30 million too. But what's amazing to me, Alex, is we had this experience with a prospective client who ended up deciding to come on board because he has tons of money, lives very frugally, but still was concerned. And I think, is that a product of the news? Is that a product of people are the facts that just everything costs so much more that no matter how much money they have, people are still really worried, even when they have, this guy has $4.5 million and he spends less than $100,000 a year. He's got plenty of money to live and do what he wants to do. I'm telling him, go spend money, have fun. You got to start vacationing. You got to go ride your bike, do the things you love to do. Why do you think that somebody like that, 4 million, 5 million, spends less than $100,000 a year is still worried?
Yeah. We don't have enough time on the show to probably go into the whole thing, but I'll give listeners 3 pieces of advice that I think would help both Darcy's client and also Jason, the one you're talking about. Yep. The first thing is you have to work with somebody, a CFP, who knows how to build an actual financial plan, which Darcy is, which you are, which I am, and we have a team of CFPs. And I believe CFP is important because they've studied how to do this. They studied the different components of a comprehensive plan. They know how to accurately put in variables like inflation and taxes, which are big ones, especially lately. And then once you have a plan built, the second thing is I think there's a really, really important kind of accountability budget exercise that has to happen within the plan. And that's especially if you're approaching retirement, Darcy, like your person next March, or this guy who's thinking about maybe he's already retired. I don't know his situation, but you have to know how much you spend right now. and how much you spent last year and how much you spent the year before. And like, you have to actually put some, and you have to have somebody like me who's going to tell you what you need to hear and not what you want to hear about that. And then the third thing is going to be kind of a tangent really, but you have to find out what you're going to do when you retire, which is that book, Purposeful Retirement, that was given to me as advice, because that can be the scariest thing for some people is, what do I do now if I'm not working? Even if even if the CFPs told me I can afford it and I know how much I'm supposed to afford and I've got taxes and inflation and the whole plan, right? Like, what am I going to do? What's my purpose in life? And those are the three things I'd say that have to happen. And even really, really smart, wealthy people, doctors, lawyers, people that are way smarter than us that hire us anyways, they need us to guide them there, right?
Yeah, I've spent a lot of time the last year helping people do budgets, because people don't. It's so hard to understand how much money you spend when you use a credit card. It's hard to teach my kids about how much money they spend when I just pull out a credit card all the time, and they haven't. They think it's just a magic piece of plastic, and woohoo, it never ends. But so I've done my own budget in the last year or so, and I make extra payments on a few things, but my budget was almost $25,000 or $3,000 more than I thought I spent every single month, including extra payments and other things that I could probably cut out. So my real budget was probably pretty close, but I'm spending, a couple extra grand a month, not thinking about it and doing things. So it's important for people to sit down and actually write it down, because when you use your credit card or track your credit card, because there's a lot of great credit card programs that help track that, your spending. So.
I was looking at this whole concept of the credit cards and how they rip wealth out of society. It's an interesting topic I'd like to study more on and get more opinions on. But, if I go to a restaurant and I use a credit card and I buy $100 dinner, that restaurant only gets $97. And then that restaurant owner turns around and goes to his vendor and buys fish, and he buys $100 worth of fish. There's only 97, or let's say he buys $97 worth of fish, that vendor only gets $94. And once it's gone through 30 or 40 transactions, there's no money left. Who got all the money?
Capital One and Discover.
Maybe that's why they have the biggest buildings in all the major cities with their names on them, with big lights that shine all night long, right? It's interesting. And when you think about Bitcoin and all the things that are coming into play, or even Venmo, like, using Venmo on a personal transaction, if I went and paid with Venmo, the vendor would get 100% of that, conceivably, if it was under 600 and not taxable, right? They should get 100% of my money. And then they turn around and buy something with Venmo, then that merchant would get 100%, and the money would stay in the system. So I guess the argument to that is that the credit card companies put the money back in the system because they lend money, and then those executives and employees have jobs, and then they go spend money, but it's all getting sucked out of the system. It's just a weird deal. So does Bitcoin solve that? I don't know.
Bitcoin.
And maybe solve it. And maybe
solve it. Maybe it does.
I mean, a way to transact where 2 to 5% of the transaction is not getting ripped out by an intermediary. We shouldn't need that in today's society with the technology that we have. You think about people building AI robots and virtual reality and all the things that are going on in the world. And yet you're telling me I need an intermediary to help me pay you that's going to take 3% of the transaction. I mean, we work all year long for a client, creating wealth management, financial plans, investing their portfolio, trading, rebalancing, tax loss harvesting, all the things we do for 1%. Credit card companies are just ripping 3 to 5 right off the bat every single day for every single transaction. And do we really need that intermediary taking wealth out of the system? I don't know. I know that's not the topic of the show. Maybe that's the next topic of a show. I don't know why I got on it, but
it's okay. I think it ties into
a little diagram.
Yeah.
Of how much money goes out when you use your credit card.
It ties into what our clients are talking about, which is kind of the theme of this show, which is we asked our advisors yesterday, what are the most common questions that your clients are asking you right now? And then the theory there behind that would be the best topics for a podcast like this one, right? What are people thinking about? I think what you just did, Jason, is what most of society does, is you go off on these tangents of things you can't control anyways. And you have to know, okay, ground myself back in reality. What can I control? Accept what you can't, control what you can. As an investor, what can you control? You can control having a plan. You can control how you feel about this year with an election and what actions you're going to take and what emotions you're going to allow yourself to feel and act upon. And then there was our third thing. Oh, we could talk about real estate a little bit too, but you went into like gold and Bitcoin and all these things. Like, should you invest in gold and Bitcoin? That's a real question people are asking right now, right?
Right. Yeah. And we're running through our investment committee, putting, a small allocation towards cryptocurrency now that there's ETFs, right? You can now buy Bitcoin with an ETF, and there are certain ETFs that are not charging any management fee that own Bitcoin until they get to $1 billion or 6 months. So there's a way to now quite easily have exposure to Bitcoin. I mean, there's so many things though with that. That's 10 shows in and of itself. So we probably don't want to get too much into it. But when you construct a portfolio, one of the things you keep talking about a plan, Alex, that I think about is the book Psychology of Money, and how I think it's Morgan Housel who wrote it, or
I can tell. Hold on, I got to just tease Darcy for a second. I can tell that she's got like someone there that she wants them to go out of the room. I love it. This is real life, folks. It's great.
It's after school time here, so it's fine.
Psychology of Money. Sorry, Jason. Psychology of Money.
Darcy's like freezing in Florida right now because it's all the way down to 63. The sympathy meter is not ringing. The sympathy meter is not going off. We live in San Diego. We used to say, "Hey, calling you from sunny San Diego," and now we say we're calling you from rainy, foggy San Diego. Right? Didn't we get like the second foggiest city in the country for the first half of last year, or during summer last year? Is the second foggiest city in the northern hemisphere, I think. It's crazy.
Yeah.
And now it rains every day.
I'm going to use my Venmo account to buy some Bitcoin right now for you, Darcy, and have you Amazon ship this another sweater so you don't freeze, okay?
Oh, thank you.
It's down to 63. She's got a snowmobile coat on and some gloves because it's 63. Jeez Louise. That's unbelievable.
Right. Tie it back. So we've got all these options as investors out there. Our investment committee is literally going through the due diligence process of arguing with each other about whether we should incorporate this into a sustainable long-term strategy, right? Crypto. Does it have a place in a portfolio given the fact that it's readily available to transact now? That a lot of the worries about it are now gone because Wall Street decided it was good.
Shout out to Tom Lombardi, my crypto buddy. He thinks that it's going to 100,000 and we should own it, but we'll see. You know what I think is more important is that when we talk about building a plan, you got to build a diversified portfolio. We've talked about alternative investments on lots of our shows where you incorporate assets that are not public stocks or public bonds, and they trade differently and they have lower correlations. So it can possibly help change the risk return profile of your portfolio. You got to incorporate alternatives. If you're an investor with more than $1 million and you don't have alternatives in your portfolio, I personally think, no guarantees, obviously, that it works, but I think that there's asset classes that make sense. I want to hit that for just a second, Alex, even though it's a little off topic, because we're talking about planning, and I think you have to plan. I was on Psychology of Money, so I'm going to dovetail a couple concepts together here. I love what he says when you should make a plan, have a really good plan, and understand that your plan is most likely not going to go according to plan, right? So because things change. And so what does that mean though? Like, does that diminish the value we're providing to clients? I thought about that a lot. I think the answer is no. I think it actually makes it more important, because imagine even if a good plan is probably not going to go exactly according to plan, what do you think is going to happen if you don't have a plan? Yeah, I mean, it's potentially disastrous, right? And with a good plan that will probably not go according to plan, at least you're able to monitor, and if it's dynamic in nature, you're able to continually track your progress, and you start to see when things aren't working out. Like, I think a big mistake people make right now is they're anchored in what historic equity and bond returns have been, and bonds are probably okay in this space, but equity returns have historically been much higher than they're expected to be going forward. And so your average financial advisor is building a plan without the proper margins of safety and without the conservative bias that is based upon historic things that have happened that are highly likely not going to happen. If you look at capital market expectations, stocks are expected to return somewhere between 6 and 8% over the next 10 years, based on the studies I've seen, where historically it's been 10 to 12%. This is like half the return. So what are you going to do in your portfolio? You should be scared. You should be nervous. if you aren't taking a really good look at your financial plan and building in the proper margins of error, and if you're not incorporating back to alternatives, asset classes that maybe can help the risk return profile. And
I think another way to
ahead.
think about it too, I believe, is as business owners, right? I think it's important to evolve with the times. For example, as an investor, you need to evolve with the fact that you have access to private alternatives. Direct metaphor to business ownership right now, how you run a business. If you haven't adopted the technology that's currently available, like artificial intelligence, if you're not using AI right now somehow or trying to learn how to use it, why not? Because it is going to make you faster and more efficient, right? And if you have access to this technology and you can learn about how to use it from experts that are leading the pack, same thing with investing. Why wouldn't you be exploring ways to evolve with the times, right? That's, I think, my version of my perspective on what you're trying to explain to people, Jason, that you've been trying to explain to our investment committee for a long time now, is it's okay to change. Plan to change. That's what a good plan plans for change, right?
It's dynamic in nature, and it has to change. And if it doesn't, you're probably going to get caught holding the bag. It doesn't mean your basic principles need to change, right? Like we've always had a basic principle and of buying stocks that have really good fundamentals, like think Warren Buffett style. I want stocks that either have unbelievably strong earnings, have great cash flow. I want stocks that have a low book to market value. I want stocks that have consistent dividend increases, different value metrics. When you look at the alternative space, I think you hit a really good point. It wasn't available to most investors. Unless you were 10 million, 20 million, or an institution 10, 15 years ago, you really couldn't get alternatives. But nowadays, because of the growth and adjustment and development of what was an old structure, been around forever, but interval funds, you can now get access to alternatives quite easily for $25,000, for $50,000. So it's available to everybody. If your advisor is not helping you understand that, you really should seek an advisor who understands that and doesn't just sling some stuff at you because you ask a question. They should be bringing it to you. But let's hit that for a minute. Like why? Well, if you look at private equity versus public stocks, so those are kind of comparable asset classes. The expected, now these are no guarantees, right? Nobody knows what's going to happen in the markets, but this is what the general consensus of expectations are, is that private equity will deliver somewhere in the low teens, maybe mid-teens type of returns with a standard deviation of, we'll call it a 9 on a measuring standard deviation. Public equities, as we already talked about, has an expected return of maybe 6 to 8%, but a standard deviation of 15 to 18. So almost double the return with half the risk in private equity to public equity. And then when you look at,
hey Jason, not to interrupt, but why don't you talk about a little bit about what private equities actually are? Because there's a lot of different categories that people can get into. So spend a minute on that.
Okay, good point. It's broad, Darcy, really good point, because when you look at private equity, there's private equity that's actually real estate. There's private equity that's buying middle market companies. There's early stage venture capital that would be classified as private equity. There's mid stage or late stage. There's buyout. So there's lots of different classes of private equity, but to encapsulate it in a kind of a 60,000 foot view in a bucket, it's owning private companies at some stage in the private company life cycle. But you're owning a private company that's privately held, that doesn't have to adhere to analyst expectations and quarterly reports and public filings. They're hopefully being run by somebody who's really truly invested in the success of that company, because their whole net worth's probably tied up in it if you look at most private companies. So that's the general definition of private equity. But there are, thanks Darcy for pointing it out and slowing me down there. There are lots of nuances and stages of a private company's life cycle.
And it's a little different buying process for people to get into instead of the open stock market too. So you have to be.
You do. You have to be aware. You have to know what's up and be willing to accept some illiquidity. Even though these new funds I mentioned, and you can now get access to 25 and 50,000, those are not completely liquid. Like if I own Apple today, or I own the S&P 500 index, I can go trade that today. I can be totally liquid, have my money and spend it in a couple of days. It's not the case in most private investments, private equity or private debt.
So if people are interested in something like this, they would need to come in, sit down, learn a little bit more about it with us, and before taking a big step into trying to figure out how to do it themselves.
I wouldn't do this yourself unless you're an expert on it. And I would also not do it with most financial advisors who will, unless they have the answers immediately and they can speak confidently and comprehensively about it. If you have to bring it to a financial advisor, they're not the right advisor, because they didn't bring it to you, then something's wrong. They don't understand it. They don't know it. They don't believe in it. They don't get it, whatever it is. And I'm not, criticizing them. It's just, it's not the right advisor for alternative assets. So, what do? You reach out to us, send an email to jason@financialdetox.com. We'll help you do that. We'll analyze what you currently have. How would you incorporate alternative investments? And how do you build a financial plan? Which sounds so boring, right? I hate talking about financial plans all the time, but everything comes back to a plan, right? Having a plan. And we have some clients that have so much money, they don't have kind of a conventional plan, but it's more of a tax strategy written out, a tax savings plan, an investment plan, because they have enough money. They're not.
Some people or multi-generational legacy building plan, right?
Totally. How do I pass the assets to my heirs in an efficient manner? And there's so much to do in those situations. And then some people are like, literally, I need a plan to see if I'm going to run out of money, because I'm fearful of running out of money. So it's very personalized. And that's why it's so important that you have it, because it's going to change. It might not work. If you have the wrong assumptions, it's highly likely not going to work. And you need it to be dynamic and ever flowing and changing with the current environment and with your situation.
Good. Well, I'm going to call you, Jason, because, man, I have a lot of stuff to work on.
You don't need me, Darcy. You're CFP. And how many years experience do you have doing this, Darcy?
I don't know. It's almost 30 at this point, I think.
I feel like I've known you since I was 10. And so.
Exactly.
My
couple years.
I think financial planning is so much fun. It's like putting a puzzle together. I love doing the financial planning. I love getting in the program. I like sharing it with our clients. I think they like to see it when you can explain it to them. We have an amazing program that we use for the financial planning. So it's super fun to me. That's one of the most fun things for me to work on.
Yeah, it's not boring, man. So hold on. I want to give people a better idea of how we do things, because it can be really boring.
Plank challenge. You got to do your plank.
I never test drive cars because I hate car shopping. You know this, Jason, from when you dropped me off at Toyota and made me leave with a truck, right? I hate.
Didn't I just give you my truck? So you.
No, that was the one before your truck. You actually left me there and said, "Don't come back without a vehicle," and I was like, "Okay." I hated it, but the reason why I'm telling the story is because most people think of the financial planning and budget process as painful, awful. Like going to the doctor, right? Yeah. I went and test drove, my wife and I went and test drove a Rivian actually last weekend, 2 weekends ago.
Those are so cool.
Because everyone's like, and I drive around in circles in Carlsbad to soccer fields and like work, and I'm like not doing that things I don't need a giant off-road vehicle to do that, right? So I'm like, all right, let's check out Rivian. I'm curious. It sounds cool, whatever. The test drive experience was really cool. It was fun. I got to press all these buttons. It has turbo mode. Like, it's really fun. And it's not like test driving, a Tundra, which I know what a Tundra drives. I've had 3 Tundras. Like, I know what that feels like, right? I don't want to go and have somebody sell me a Tundra. I just want to, and they don't try to sell you anything there at Rivian. You just go. They don't even go with you. They're like, here's the keys. Just go. Have fun.
No way.
Yeah. I was like,
so it's a great experience. And so what you're trying to say is that our financial planning experience is that fun.
It is way better than what you think it is. So just try it. Call Darcy even. She'll make it really fun.
I think you make such a good point, because when I say that, it's boring. That's my fear, is that people see it as what it isn't. Because when you sit there and your whole life is interrelated and every financial aspect of your life is playing and working together off of each other, and you can see the cause and effect relationship of, if I do this, this happens. And that it's a wild and really cool experience to know. And like this client that we just brought on, or I think we're going to bring him on, and what an awesome experience for him, that literally he's really just a down the fairway kind of guy. Again, tons of money, not enough spending, needs to spend more. And when I showed him, look, you can spend $250,000 a year, and you're not going to run out of money. I said, why aren't you going? He loves to ride bikes. I'm like, why aren't you in friend? And he wants more friends and social life because COVID took him out, and he doesn't have kids, and he's not married. And it's just like, why aren't you on a tour in Italy or France on a bike tour with a group of people, meeting people and riding your bike through Italy and France, for a $25,000 vacation? Because you could drop that. I'm in too. I told him, if you need a chaperone, I said, if you need a chaperone or, something, I'm in. But his, for the first time, I think in a while, like, he had a reason to be excited. Like, he had a reason to go, I can do that? Like, right, I should be doing that. I'm like, yeah, like, book it. Like, I'll help you book it if it'll get you out to go have fun. And that is special. That you can't recreate that without the right tools, the right leader, mentor, CFO, somebody taking you through that process. It's really hard to do.
Right. I think that should just be the end of the show, because you've just said everything right there.
Well, we have to go plank anyway, don't we? And by the way, this plank thing, by the way, if you're looking to get strong, I feel like I'm in pretty good shape. I don't know that I'm strong, but I'm in pretty good shape, and I practice jiu-jitsu, and I think it's an awesome art, and I love it. But Alex and Eva in our office literally just crush me in this planking thing. I mean, it is so hard to plank on your elbows. Your core blows up after about a minute, and then we still have 3 minutes left to go. This is something special, this planking. I've never got into it.
It's a brand new thing, Jason. Go get it.
Let's go. 4 minutes. You want to bring us home, Jason? For real?
I think somebody else should. I don't know.
Oh, come on. All right, Alex, close it out.
Nah, look, Alex, I won't put that on you. I think it's a great discussion. It is fun to talk about this, and there's a lot going on in the economy. There's a lot going on in people's financial minds. The election's coming up. If there's ever a time to get a grip on yourself financially and understand what you have and why you have it and understand your plan, it is now, right? I mean, we're highest debt we've ever seen ever in the history of our country. It's radical what's going on, and you need the right portfolio, and you need to have non-correlating assets in that portfolio. You need to have a plan that's dynamic and flowing in nature. And this is what Financial Detox does. This is the consumer education brand for our wealth management firm called IDA. You can check that out at idawealth.com. We invite you to give us a call anytime, because we want to help you. We have capacity. We can bring on new clients. We want to help you make a difference in your life and let you see what true financial peace of mind means. And that is a word and a set of words that really means something special to us here. And we watch it transform people's lives every day and how they live to their maximum and fullest potential. And that is really special to see. So we want to help you do that. If you're interested, we can be a sounding board, or we can be your full private CFO and take you through the process. Again, check us out at financialdetox.com. Send an email to Jason at financialdetox.com. And you can give us a call at, what's our number?
877-707-8889.
There you go. All right. You can find us. We're not hard to find. You know where we are. I hope it's helpful. I hope it's useful. Darcy, thanks so much for joining us from that ice cold polar cap you're on down there in Florida at 62 degrees. Alex, down the hall from me, right here in foggy, rainy San Diego. Thank you, buddy. Appreciate you guys. Thanks for tuning into the show. It's Financial Detox. I'm Jason Labrum, and we'll catch you on the next show.